Hello and welcome to another episode of Full Court Finance here at Zacks. I'm your host, Ben Rains, and today we're breaking down Nike stock ahead of its upcoming earnings release that's due out on Tuesday, so tomorrow. But before we get into everything, I want to say, remember, if you have any questions or episode suggestions, please feel free to shoot us an email over at podcasts@zacks.com. Also, make sure to subscribe and leave a review wherever you listen to your podcasts. And make sure to check out our new zacks.com/promo page for a look into some of our services, portfolios, and more. All right, so we're going to do a quick little market recap before we dive into Nike, just to give people more of context of what's going on with Nike. So stocks fell to start the week again, which pushes the market's pullback into its fourth consecutive week. The tech-heavy NASDAQ now sits down about 12% off its early September highs as some of the big tech high flyers continue to pull back and stall as volatility returns. So analysts and traders are now becoming a little more nervous maybe about the lack of progress on the second stimulus bill, and the uncertainty of the upcoming election isn't helping things at the moment. That said, the overall earnings outlook continues to improve. So our most recent Zacks data, this is published from Friday, calls for overall Q3 earnings for the S&P 500 to decline about 23%, so over 23% from the same period last year, on about 3.1% lower revenues. This would mark a big improvement from Q2's about 33% earnings decline. And we continue to see these estimates trending in the right direction, which is a good sign. And so if we look at then the S&P 500 on an annual basis, our data is pointing to about a 21% earnings decline this year on about 5% lower revenues for all of fiscal 2020. So this obviously includes a pretty extended period of economic downturn due to the coronavirus. And then if we look ahead to 2021, we're calling for earnings to rebound up 25% from our current year estimates on about 8% stronger sales. So heading in the right direction for Q3 and Q4, and that gives you a context of what to expect for fiscal 2020 and what to expect next year. And then on top of all of that, interest rates continue to remain pinned near zero, as they will be likely for at least through 2023, based on a lot of what the Fed is saying. So with all of this, you're going to see people continue to chase returns somewhere, which has historically benefited the equities market, as that TINA effect, or there is no alternative, continues to remain high priority with interest rates so low. So with this all in mind, we're going to take a look at Nike. The firm is one of the first of a few big names that is reporting what we here at Zacks consider as part of the broader Q3 earnings season. We've already seen such results from FedEx and Adobe and a few others. So Nike is one of those first big stocks to report what we're calling as part of their broader Q3 earnings season, even though it is their Q1 fiscal 2020 results that are going to be due out after the closing bell on Tuesday, September 22nd. So after the closing bell tomorrow, or Tuesday, the 22nd, whenever you're listening to this. So we're just going to kind of go over Nike, as I said, diving into the stock and seeing what to expect, to give people a sense of what maybe they should consider doing with NKE stock at the moment. So long before the coronavirus was even a minor concern, Nike had been benefiting from its transition to a higher margin direct-to-consumer model. Last year, Nike executives projected that the firm's digital unit would account for up to 30% of Nike's total business by 2023, compared to what was roughly 15% at the time. So along with this digital push and direct-to-consumer push, they've rolled out multiple apps in recent years, expanded their social media reach and presence, as people now shop directly on platforms such as Instagram and elsewhere. And on top of this broader digital push, they've digitalized their supply chain to increase efficiency, and they've also continued to invest and modernize their own stores in high value cities with what they consider to be great cultural influence. So this is places like Tokyo and New York and Paris and Shanghai. So they're not just totally giving up on their own standalone brick and mortar shops. This has happened as they've seen department stores and malls continue to fade in this Amazon age. They've also seen newcomers like Lululemon rise to prominence with a similar direct-to-consumer model, digital marketing heavy operation with their own relatively completely standalone brick and mortar shops. They're not in malls and other places that are slowly fading. So that's Nike's model as well, as it has been. And they're also continuing to maintain some strategic relationships with the likes of Foot Locker and the key players in that booming online sneaker marketplace, that secondary marketplace as well. So despite the success of Lululemon and the resurgence of Adidas, which is its main rival around the world, especially Adidas coming back in North America, Nike remains that global powerhouse in both global sports and regional sports. So from soccer and basketball to the NFL and even cricket in places like India. So more importantly, the company has also expanded its influence over fashion as a whole. So this is off of the court fashion. Sneakers are more sought after than ever, and streetwear has now become very mainstream. So that's continuing to drive Nike and will likely to for years to come. And with this in mind, Nike remains one of the world's most valuable brands. This is based on Forbes data. So this is alongside the likes of Coca-Cola and McDonald's and Disney. Really, those players like Nike and Coca-Cola and McDonald's and Disney are behind only those big tech names like Apple. So this fact is certainly hardly insignificant, since the top of the list, as we just mentioned, is full of blue chip stocks that have done really well over the last decade and will likely continue to drive the market for years to come. So with this in mind, Nike shares have outpaced the S&P 500 and its industry in 2020, and its pandemic performance has been even stronger. So it's up about 80% off the market's March lows. This tops Adidas, and as we mentioned, the market as well. This recent run is part of a longer climb for Nike stock. But with that said, the stock has slipped about 5% since mid-September, and was down around 1% through morning trading on Monday. It's trading at about $113 per share at the moment. And despite this little bit of a pullback, it still sits solidly above both its 200 and 50-day moving averages. And we should also note that investors for years and years have been willing to pay a premium compared to its industry and its peer group and even Adidas for Nike stock. So that's its valuation reflects that. And then on the dividend front, its dividend yield rests at about 0.85% at the moment. So this tops the 10-year U.S. Treasuries about 0.66%. So you get a solid dividend yield, at least that beats the 10-year U.S. Treasury at the moment. And then if we look at the stock in terms of the brokerage recommendations we've collected here at Zacks, so 18 of the 26 recommendations have Nike at a strong buy at the moment, with 3 more at a buy, and then we have 4 at a hold. So these are different than our Zacks ranks, which are based on our earnings estimate revision. So this is broader, just those things you see in the news of analysts saying this stock is now a buy. That's what we're talking about when I say that the brokerage recommendations are 18 of the 26 at a strong buy. So then looking ahead, we're going to take just a quick look at our Zacks estimates. So last quarter, Nike stock, if you just looked at their numbers, pretty disappointing. Their Q4 FY20 revenue fell about 38% for the 3-month period, ended on May 31st. But Wall Street looked right past this because it was out of Nike's hands. Many of its stores were closed due to the coronavirus. So instead, they were looking at the positives, and this saw Nike's digital sales jump 75% in the quarter. So now looking ahead, our estimates are calling for its Q1 fiscal 2020 revenue to slip about 14%. So this would come in far better than last quarter's 38% decline. And its adjusted earnings are projected to slip about 50% to 45 cents per share. And if we look further down the road, so for the full year, FY21, so fiscal 2021 for Nike, we're projecting its adjusted earnings to jump about 45%. So some positivity obviously coming in the coming quarters on 6% stronger revenue. And then if we look ahead to FY 2022, so that next year we're calling for another 41% bottom line growth on 13% stronger sales. So clearly heading back in the right direction for Nike. Nike is currently a Zacks rank number 3 hold at the moment, and it has seen some mixed earnings estimate revision activity recently as we head into the release of its Q1 FY21 results after the bell on Tuesday. So overall, it would seem that Nike seems worth considering as a longer-term play, as we mentioned, for all of the various reasons. As a retailer, you might want to consider that certainly going to remain on the cutting edge and in an industry that's going to matter for years and years and years, and they are able to pay a dividend, continue to push the boundaries of the industry at always sort of determining what's cool and what's next. Nike remains very popular on that side. Obviously, in the near term, things are less certain given the market volatility, and we've already seen Nike stock surge so much. And we should note that the last 2 quarters, Nike has traded pretty heavily following its earnings release. So if you're playing it for near-term gains following earnings, that's always more risky. But as you mentioned, the last several quarters, or last quarter, big bottom and top line declines for Nike. We're expecting that in Q1 as well. But Wall Street is always forward-looking, and they've clearly been looking to Nike's return to growth. So it seems like a stock worth considering as a longer-term investment at the moment, even though amid the current market conditions, we could really see anything happen in the next several weeks or as we head into the election. So that does it for another episode of Full Court Finance. Until next time, I'm your host, Ben Rains. And remember, if you have any questions, please feel free to shoot us an email over at podcast@zacks.com.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.